Hello, my name is David Wright. I'm the Managing Director of 60 Plus, and welcome to my very first video presentation. I hope this will be an informal way for you to learn a little about the many aspects of this important subject. Today I'm going to talk about the basics. What is equity release? And is it safe? Equity is the name we give to the money in our properties. Equity release is a way of getting some of the money out of your property without having to move. It is a much older service than many people think. Although it has become mainstream in the past 10 years or so, it actually dates back to 1965. You need to be at least 55 to take equity release. And in 2009, nearly £1 billion of equity was released in over 20,000 new plans. So, if you're thinking about equity release, you are not alone. The common features of all equity release plans, at least those that we advise on, are their safety. Nearly all equity release providers are members of Safe Home Income Plans, or SHIP for short. Plans from SHIP members provide important legal safeguards. These are incredibly important to understand. We're talking about the roof over your head. All plans from SHIP members give you the right to remain in your property for the rest of your life or until you need to move into long-term care. They also guarantee there can be no negative equity. That means the value of your equity release plan can never exceed the value of your property. Portability means that you have the right to move house and take your plan with you. You will receive independent legal advice. This means that your solicitor acts only for you. The equity release company will appoint their own solicitor. There are two main types of equity release. Firstly, a lifetime mortgage. You continue to own your property. Instead of making a monthly payment, the interest rolls up, so the mortgage gets bigger as time goes on. The mortgage is paid back when your property is sold and the balance belongs to you or is paid to your estate. The other option is a home reversion plan. This involves selling some or all of your property at a discounted price. This is because you will be paying no rent. Because there is no mortgage, there is no interest to roll up. If you've sold part of your property, the remaining percentage is yours or provides a guaranteed inheritance to your beneficiaries. Some features are common to both types of plan. There are usually no monthly payments. Unless you release the maximum amount in one go, you can come back for further amounts later on. And both types of equity release come with SHIP guarantees that we saw on the previous slide. As for which one is best, I would suggest have an open mind. There are a number of factors that can affect your decision, such as life expectancy and future house price inflation. I will be making more presentations soon covering these subjects. Frequently asked questions when I will try and dispel some of the myths that surround equity release. In plan options, I will look at what choices are available. And in the advice process, I will explain the importance of professional advice and how the process works. I hope this has been useful for you. If you have any questions, please call me or send me an email. Thank you for listening, and goodbye for now.